Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified, episode 42. Wow. So what are we going to talk about? Well, initially I was going to talk a little bit about Darvis, or continue my discussion on Darvis, I should say, and talk about how breakouts work in breakout markets and focus on IPOs. And then I got to thinking, there's so many great examples lately. I think we need to make hay while the sun shines, and I should show you all these things that are working out nicely because the market is trending, and when the market trends, a trend following system works really well. Breakout systems really don't work that well as a general statement, but they do work well in IPOs, and some of my stuff is sort of similar to Darvis, and that'll make a lot more sense in a few minutes. So I'm going to use the mystery charts, reveal a few of those, give you a new one or two, and then I want to talk about what has happened with the stocks from the pitch, which I was a guest panelist last week on, and that'll make a lot more sense in a few minutes. By the way, I do take requests. I'm way backed up for now, but here's the good news. I do a show every Thursday, which is a little bit more free form, and lately we've been doing those on nights. That's Dave Landry's The Weekend Charts. Check my website, DaveLandry.com, for that, and usually on Thursdays, the link will be up at the top of the page. I'd love to have you there. If you do need to reach me, DaveLandry.com/contact, if you want the slides from this presentation and all the other presentations that I've done up until now, all 41 of them, I guess 42 after this one, go to DaveLandry.com/StockCharts. I'll also give you a market timing course along with a introduction to my methodology course and limited access to the members area. All right, let's talk about mystery charts and the methodology in action. So here's one from a week or so ago, and this is in H, and it had a very nice trend higher, and then it pulled back, as evidenced by coming back to the 30-day EMA in here. And you could look at the Landry light at the bottom, and you could see that it came down and kissed the moving average based on Landry light. Landry light's going to be green as long as the lows are above the moving average, and it's going to be red as long as the highs are below the moving average. And when they're intersecting the moving average, the price bars that is, they'll be flat. By the way, in the pitch, Dave Keller assumed this was magnitude, and he mentioned magnitude. It's actually just counts the number of days, so not magnitude. So you could see that price was actually closing in on a moving average, and this was still headed higher, and that's because each day it stays above counts as one additional day. You could set the parameters on this for wherever you want them as far as the height. You could also set the moving average to an EMA or an SMA, which is a nice little feature there. Lately, I really like the 30-day exponential moving average, and I'll flesh that out in a few seconds. Also, if you need help in being able to afford the ACP plugin, my ACP plugin that is, I can't help you with your StockCharts subscription. That's between you and StockCharts. But I'll tell you what I'll do. I'll go ahead and give everyone watching this presentation who likes the video a free copy of my plugin. So it's very generous of me if I say so myself. So anyway, we do a little kiss of the moving average. Somebody recently asked me if they should just be trading these 30-day EMA pullbacks, or Landry light pullbacks as we now call them. And my answer was not necessarily, although it is a bit of the church of what's happening now. They seem to be working out fairly well, this one notwithstanding, and a couple here and there haven't worked, obviously. Not everything works. If everything worked, you might not see my fat arse again. But they have been working out nicely, and the only thing, if you're just trading that one pattern, you would occasionally miss a setup that doesn't pull all the way back to the 30-day EMA, and I'll show you a TKO here in just 1 second that did just that. But if you are newer to trading, then by all means, find something that's, I wouldn't say quantified, but qualified and easy to recognize. For instance, bow ties have really caught on with a lot of people. Go and watch, I think, show number 2 or 3, we talked about bow ties. And that's really struck a chord with a lot of people because they're easy to recognize. And I think the Landry light pullbacks could be the next bow ties because they're fairly easy to recognize. And I'm going to talk with, I mentioned it once, I need to follow up on it, see if we can get a scan for you guys over at StockCharts to be able to scan for these. So anyway, the entry was here, the stop was down here, and the initial profit target was up here. Now, keep in mind that we did discuss these parameters when we talked about the money management. I also have a complete money management module which goes into a lot more details on this. Essentially, on the entry, you want it far enough away from price to stop from being triggered on noise alone. The stop has to be far enough away to withstand the short-term volatility, the normal volatility of the market. And that helps to make the projection to the initial profit target, which is simply entry minus stop plus the entry. And we exit half our shares there for a swing trade. And then we trail the stop for hopefully, I don't know, I should never say the word hope, but hopefully a long-term trend. Now you can see this really hasn't worked out so well. And you're probably thinking, well, Dave, why don't you just get out? Why don't you just get out? Well, let's just see what happens. And if this goes on to make new highs and we make a lot of money on this, this will be a great dead money report. And if it stops out, well, it happens, spelled with silent SH. So far, not so good, but there's still a little hope. I was going to be a pessimist, but I figured it wouldn't work out. I think that's right with a W. So anyway, that was a trade in the chart, as you can see. And so far, again, it's failing miserably. And this is the old portfolio. We risk 2% per trade. We try to make at least 1% on the first loaf. So you'll notice anywhere there's white in here means that we took partial profits. So like on this Chewy trade, this was a former mystery chart. We talked about it a lot, as was APG. You could see about $1,000 here, about $1,000 here, or 1% on the trade. Now here's another former mystery chart. Let's go ahead and follow up on it. You can see that we've got a nice longer term uptrend here. And you can see we had about 80 days or 75 days where the lows were greater than the 30-day EMA, or as I call it, Landry light, nice green Landry light. And the market pulls back. In this particular case, the stock. I use those terms interchangeably because I think markets are markets. They all trade in emotions. And you can see that the Landry light goes away when we intersect the moving average. And then we had an entry up here, a stop down here, and an initial profit target up here. By the way, if you want to see all of these trades, just so you know that's not in hindsight, you can go to davelandry.com/archives. So most of the ones mentioned, if not all of the ones mentioned, I think so far as mystery charts have been actual recommendations in my trading service, and you can access those at davelandry.com/archives, and I'll put up a link. And you can see it triggered, and it hasn't set the world on fire, but so far it's better than a poke in the eye. We hadn't quite hit that initial profit target. I don't get too excited about a trade until and unless it hits the initial profit target, and then I'm able to get into longer term trend following mode on that, meaning that I let that stop gradually loosen up. And if you go in and watch the presentations that we did on money management, that'll make a lot more sense. Here's AU. This is a former mystery chart. And you can see it was in a really nice trend. Lots of Landry light began to pull back like all the other setups so far. And then the Landry light goes away when you intersect the moving average. And there's your buy down there. You can see 34, 28.80, and 39.20 for a risk of 5.20 for the entry, protective stop, initial profit target, respectively. And you can see there we go. We pull back to the moving average. And then here are the parameters on the chart. And let's see what happens so far. Well, so far, the market tried to rally, but then came back in. And now we have downside Landry light. So this stock might be in trouble. So let's go ahead and pull that off of the list. No trigger, no trade. As I said in prior weeks, sometimes I'll get an email from somebody 6 months from now. And I'd be willing to bet, maybe on this one, I'll get an email 6 months from now. Hey, Dave, I'm down 50% in AU. What should I do? I'm like, I did not recommend that stock. You must have me confused with someone else. And I'm like, yes, you did. Go back to August 13th or whatever the day was. And lo and behold, I did, but it did not trigger. So no capital is put into harm's way on this particular stock. And believe me, this is very important. Missing a lot of stinkers is vitally important. If you can miss all your bad trades, all you'd be left with is good trades. But obviously, that is a bit of a holy grail hunt. But there's certain things you could do to avoid missing a lot of bad trades. All right, here's the mystery chart reveal. BCLI, and you can see it was recommended for today. Today is August 18th, and it was on the service, as you can see, for a few days before it actually triggered. So you can see nice uptrend. Notice the lows are greater than moving average, as evidenced by about 50 days or so of Landry light. The stock pulls back. This is an absolute beautiful setup. Pretty excited about this one, but so far it really hasn't done much. And you can see again a little pullback to the moving average. And these should be fairly easy to scan for. I actually look at a couple thousand charts every day, and I do so by running very loose parameter scans. I just like to look at a lot of charts, and it gives me a feel for what's going on. And we'll do a show on that possibly down the road. But if you don't have that kind of time, or you don't want to pay me to do it for you, then I think it's possible to create a scan based on this, and you'd look for at least, let's say, 10 days of Landry light, and then you look for 0 Landry light, in other words, a pullback to the moving average. I think that should be easy to write a scan for. And I'm gonna work with Grayson and whoever else over there can get the job done to possibly get a scan for you guys. But you can see that it did trigger, and so far, not a whole lot has happened. It was in the black yesterday, and now it's back below. But let's just see what happens. So one more mystery chart. Nice uptrend here. Nice little Landry light for a while, about 10 or 15 days or so. Now you will notice, and I talked about this one last week, that you did have Landry light back in June and July, and although it would have worked, as a general statement, and this is why I'm a discretionary trader, you can see that this market did lose quite a bit of momentum then, and so I certainly would not go in and buy a market that's losing steam. Ideally, you want to see something that's accelerating higher, and we have a couple examples of acceleration in just a few minutes. And again, we get a little pullback here, a little kiss of the moving average, which makes the daylight, or as I now call it, Landry light, go to 0. So let's see what happens. Entry here, stop down here, and initial profit target up here. And by the way, I don't want to talk my own position, but the BCLI I just mentioned, I still think that one has potential. So you can see that so far this stock hasn't triggered, but I still think it has potential. Now, if it continues to drop and or pull back, either one, eventually I will take it off my list, and then I'll go off and try to find a new setup, or I will find a new setup. One more in here. This was from the pitch yesterday. I did get long on this one on a bit of an aggressive entry. I thought I could possibly get a day trade and have it turn into a longer term trade. So far, it hasn't worked out, but that's kind of the idea on this one. But it is a longer term setup, and you can see we've got nice Landry light here, and then you have no Landry light as it pulls back to the moving average, and then again, I think it looks pretty impressive as a pullback. Now notice also you have acceleration higher here. You want to look for stocks that are accelerating and not decelerating. You should be able to eyeball that with a little bit of experience. I'm amazed at the amount of people show me stocks that are actually just the opposite, have begun to lose steam. And you can see it pulls back here. So acceleration versus deceleration is a good thing. Now, this is one I also mentioned in the pitch. This is silver. I'm not a huge fan of trading ETFs in and of themselves, but when you see silver set up like this, you might want to go out and look at silver and gold stocks on an individual issue basis for a possible trading opportunity. And what do we have? Once again, we have that acceleration. I call that the accelerating momentum strategy, for lack of a better word. But again, nice acceleration. TKO, I think TKO was show number 2, maybe, or it was one of the early shows. And you could see it began to take off a little bit. So in a case like this, you could use an entry above the TKO high and place a stop below the TKO low. And so far, so good as far as silver trying to resume its uptrend. Now, some of the other examples I want to show today are IPOs. So I thought it'd be a good idea to kind of give you a brief introduction to IPOs. I did an IPO course, geez, probably 6 or 7 years ago, and it's all still pretty much the same as it was back then with a few little tweaks. So the good news is it's still conceptually correct. And I named the course IPOs, the Promise of the Future. Many times with these IPOs, the promise never materializes, but that's okay. You can make a lot of money off of the euphoria. And one reason I love IPOs is because they trade, in a lot of cases, purely on emotions, and they can really be a technician's dream. Now, I want to just kind of give you a thumbnail sketch of the buy at B. It's a little bit more complicated than it appears on the surface, although it is a fairly simple setup. And some of the nuances are you got to have the right range, and you have to have enough volume, and that could be a little tricky. And I'll touch upon a few of these things. But if you understand just a couple of little concepts here, it'll make a lot of sense. And the great thing about IPOs is with a very limited traded history and the difficulty in shorting them, and unless you're a market maker, you really can't short them, at least not initially. If they're making new highs, everybody's happy. And then the ABCs of technical analysis comes into play. If a market's going to go from A to C and B is somewhere in between, in a general stock, you can't just buy at B because it might be overhead supply, or there could be people that have been holding it for a long time looking to get out or get off the hook. But with an IPO, when it's making new highs, everybody who owns the stock is happy, and it could attract a lot more people in and wake up some people to the fact that it might be worth a shot. Now, I've identified about a half a dozen very, very common patterns that happen in IPOs, that occur in IPOs, and probably about another 6 or 8 of maybe not as common patterns, but still very tradable. The first pattern, which is probably one of the most common patterns, is what I call the die and die. And in Thursday's weekly charts, which will be on the 20th of August, likely Thursday at 6 Central Daylight Time, I'm going to show you quite a few examples of the die and die. And remember, the first time I did an IPO presentation in front of an audience, and I showed stock after stock after stock that came public and went down. One of the audience members assumed that I was making a case that IPOs just go down, and he got all excited and wanted to short them. It's like, no, they're hard to short, and number two, the euphoria is such where you want to be buying IPOs, not trying to figure out a way to profit from the downside. The whole point of showing all these stocks that come public and just absolutely fall out of bed is that if you just simply avoid the ones that go down, you could stay out of a lot of trouble. Not all trouble, but for the most part, you'll avoid quite a few IPOs. It's the old Will Rogers saying, buy stocks that go up. If they don't go up, don't buy them. And in IPOs, you can pretty much do just that, which is pretty cool. And by not getting too excited and waiting for at least 1 week of trading, the earliest we'll enter an IPO is on the close of the 5th day, you can avoid a lot of losing trades. Now, I use a sardine. It's the old story of the trading of the sardines, and I'm not going to get into the details of that today. But basically, sardines are for trading, not eating. And you need to make sure you get out of the IPO before it begins to stink. And the way you do that is you take partial profits and you trail a stop higher. When you get knocked out, you get knocked out. And you move on and find some more. So one of the other common patterns is the fly and the die. An IPO just comes public, they take off, and they do exceptionally well, and then they run out of gas. Maybe the promise of the future fails to materialize, and then they begin to implode. But you can make a lot of money off of the fly and die pattern. You just have to get out as the IPO begins to die. Don't fall in love with it. It's just simply a trading vehicle. Now, I just want to show just real quick. I just ran in and grabbed a screen capture from Dave Landry's Trend Traders, which is my Facebook group. You have to be a member, a gold member of DaveLandry.com to participate in the group, and that's to keep the riffraff out. I'm half kidding, but I've been parts of many groups in the past, and it just seems like the LCDs can really drag you down. But so far, this group has been phenomenal. I think qualifying everybody has really been good, and I learn a lot from these guys, and they give me a lot of setups too. In fact, right here, I'm just kind of noticing this ANNX is one I'm going to look at in a few minutes, and this is one that I actually traded, and I think I personally mentioned it to the group, but I know that they talked about it quite a bit, so it reminded me to take it. And I actually, if you do a search on ANNX in the group, you'll see that I actually was thanking these guys for reminding me of it. So here's the gist of the buy at B. A little bit more complicated, but basically we're going to buy IPOs on the first new closing high on or after day 5. If day 1 sets the high for the week, it must also close above the day 1 high. Otherwise, don't worry about the day 1 high. That'll make sense when we go through a few examples. As a general statement, avoid stocks greater than $20. And right now, I've kind of upped those parameters a little bit. Back when I did the course 6 or 7 years ago, whenever it was, I found $20 was a sweet spot. Anything below $20 had tremendous potential. Right now, I'm a little bit more lenient with that. I might use buy at B for something that's $25 or so. But for the most part, $20 is a good general rule. If they're above $20, you want a little bit more momentum, so you want to add in a momentum filter such as the 5-day SMA Landry light. And here are some of the details. Again, there's a lot of details to this pattern, even though it's really, really simple. But range is important. You need to find something that's moving. If it's not moving a lot or doesn't have a lot of range, I should say, then trade more of a secondary setup such as a pullback. And pioneer versus secondary setups, I explained that last week, and that video is available on my website. It's Dave Landry's Weekly Charts, and I'm going to touch upon that and a lot of other concepts in Thursday's show. Volume can be a little tricky because you don't have that much trading history, so it can be a little tricky. Every now and then we'll get in one, as one of the guys in my Facebook group calls it, a Hotel California. They'll let you in, but it's kind of hard to get out of some of these when the volume dries up. So kind of a tricky conversation, but if you can see several days where you have, let's say, 400,000 or 500,000 shares trading, it's probably liquid enough to trade. What's the story, fad or glory? If a publishing company comes public, I'm probably not going to rush out and buy it, at least not on a pioneer setup, maybe on a secondary setup. And you got to be a little careful not to confuse issue with facts, because I did miss Carrier Corp because I just couldn't get that excited about ACs. Now, by the way, they don't have to be splitting the atom. It could be a burrito company or yoga clothes manufacturer. I remember I didn't take Lululemon once because I thought it was stupid. They make yoga clothes. Well, evidently, they make good yoga clothes. So here's another one that was mentioned in the pitch, and this is an IPO. Notice on day 2, the high is greater than day 1. So that sets the high for the week so far. So we no longer have to worry about the day 1 high, day 3, day 4, day 5. So our buy is going to be any close above 25, round numbers, and maybe give it a little bit of a wiggle room. And again, we're not going to buy when it touches 25. We're going to make sure it closes a day above 25. And in this particular case, as I said earlier, because it is greater than $20 a share, we also would like the low to be greater than the 5-day SMA. In other words, 1 day of Landry light. And you can put these into ACP if you wanted to illustrate that Landry light for you. So that one has not triggered. Now here's another one from the pitch. Day 1, day 2, day 3, day 4, day 5. Which day is the highest high? So that would be day 1. So now the market has to not only close at a new closing high, it also has to close above the day 1 high. And it did after I mentioned it on the pitch. And then in after hours trading, you can see I bought it here. I talked about this stock in the pitch. I guess around noon or so, we did the recording, and then at 3 o'clock, or right before 3 o'clock my time, which is a few minutes before the close, I went ahead and got my buy-in, and then a little bit more than 2 hours later, luckily, it was hitting my initial profit target, in this case, about 2 points. And the reason I use 2 points is buying at 18 and change, if it comes back in a couple of points, it's way back into this range, and it would suggest that I got caught in a false breakout. So that's why I was using 2 points. And so far, this has been the best trade of the week. And I hate to use the word hope, but hopefully I'll be able to ride this stock out for a long, long time. And I promise you, I'll follow up with it in future shows. Now, we talked about this one a little bit last week. 1, 2, 3, 4, 5. What's the highest bar for the week? Will it be on? It would be on day 4. So we're not worried about the day 1 high anymore. Now, any close above the day 4 high would be an entry. And again, notice the high is greater than the day 1 high. So we're not worried about that. It's the greater of the closing high and the day 1 high, provided, of course, that the day 1 high sets the high for the week. In this case, it did not. So any close above this high would be an entry. And also, by the way, it doesn't look like it on this chart, but the range is fairly big on this, 15 to 19, so 30-40% range is a pretty big range. So the buy would be market on close. And you can see, in this case, because it was a fairly volatile stock, only 400 shares, and this is on roughly a 100K account, what I call my model account. And it didn't do a whole lot. First few days, or first day and a half at least, it was a little bit scary, but then it took off, and we were able to get partial profits out. Came back in the next few days, and then now it's doing okay. It's back towards its old high. So one day at a time, but so far so good on that one. Now here's another good example of buy at B, and in this particular case, using the day 1 high rule. You can see the high was set on day 1. So now we know not only have to close at a new closing high, which would be here, which was also set on day 1, we'd also have to close above the day 1 high. And that's to avoid buying in to a market where those who got in on day 1 are looking to get out at break even. This way, everybody is happy. So you're going to buy market on close, and you can see there's a trade there. And let's take a look at what happened. Well, not a whole lot has happened since, but now we're in the black a little bit. It's better than a poke in the eye. It was a little bit higher right before I went live with this presentation, so that's a good thing. By the way, it does take a leap of faith to jump in and buy these on the close, because you don't know what's going to happen. And we have one more here. Day 1, day 2, where's the high set? Day 2, day 3, day 4, day 5. Closing high is on day 2. We don't worry about the day 1 high. We buy this one market on close. And you can see it kind of failed miserably at first, but it didn't stop us out. And now it's beginning to bang out some new highs. So far, so good. Well, that's my time for today. If you want to learn more about IPOs, watch last week's show, Dave Landry's The Weekend Charts, from my Weekend Charts, which is on my website, davelandry.com. If you need to reach me, davelandry.com/contact. And if you want the slides from this presentation and all the rules and a bunch of other goodies, go to davelandry.com/StockCharts. So thanks for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.